guys an update from the last Robinhood update that we did. I've made a couple moves since then, but a lot has changed, man. A lot has changed in the world that we all live in with the pandemic and things getting worse. So, and of course, that's affecting the market, and it's really affecting everything. Forget the market, just human lives. If you are new to this channel, it's your first time, again, my name is C-Nail, how I see it. What you can expect from my channel is an eclectic blend of all kind of stuff. This just so happens to be my series on updating you and bringing you guys along with my Robinhood journey. New investor, learning, growing, absorbing, but looking forward to building wealth. I'm big on that with 20-something, 30-somethings out there. But me, I'm 30. I'm in my 30s, so for me, it's important that we get that message. And even if you're just starting, you've already started, you're a beginner, you're a novice, it doesn't matter, man. Welcome, welcome, welcome. Your family, I appreciate you taking the time out to check out my video, man. And oh man, that ain't no pet. Come on, man. Okay. I had to get that in, right? Go count. Okay. Let's put this back down. But anyway, man. So again, I'm excited. Made a couple moves since our last video. And looking forward to giving you the updates. And before I go into the video, let me back up. Okay. Anyway, let me back up. Again, if you're new to this channel, man, I want you to be comfortable here. You're going to see all kind of content here. An eclectic blend of stuff. I'm a big sports buff. I play daily fantasy. I love talking about stewardship and money and ways that we as people can build wealth. So you can expect 3 videos a week, Monday, Wednesdays, and Fridays. Definitely looking forward to sticking to that. Although it is crazy times, it's been a crazy week for me. Looking forward to you guys joining me. You watching this video for real is almost as important as you liking, subscribing, and hitting the notification bell so you don't miss a video. With that said, let's not waste any more time. Let's get into it.
So let's go ahead and get into it, man. The last video, the investing amount was $1,082.93. As you see on the screen, the current investing balance is $1,831.82. So what I want to do with these videos is I'm going to update you either on one of two things, either what I've already done in terms of stocks that I've either continued to purchase or opportunities I saw in the market with companies that I wanted to take my shot. As the last video, I said, if you're doing your homework, you're doing your due diligence, and you're looking at companies, taking that deeper dive into companies, and you feel comfortable with a particular company and their stock, man, take your shot. Again, it's the stock market, so we cannot completely eliminate risk. I mean, it's the stock market, but your focus should be mitigating that risk again. So, you don't have to, and that could come in different forms. You may buy some stock, in a company that you want to take a shot on and try and balance that out a little bit. Now, again, it's the stock market, so balance within reason, but balance that out with a lot safer company, or just not spend a whole lot on that particular company. I mean, there's various ways you can do it to mitigate that risk. But again, take your shots. So I'll be updating you on the activity and moves that I made, or I'll actually be making the moves on the video with you guys so you can see the moves as I make them. This particular video, I made a couple of moves since the last video, so I wanted to update you guys on those. So we'll dive right into it. Again, 1831.82. It's not really about the overall balance now. It's more so for me working the system, continuing to focus on that discipline. and making sure I'm equipping myself with the weapons that I need to make confident buying decisions and trading decisions. So the first of which I did buy one share of Aurora Cannabis. And again, this is one of the cannabis companies, one of the three cannabis companies that I'm investing in. Again, I only bought one share. Last time on the update, I was at 510 shares. We'll bounce over here and see how that looks in terms of transactions. Let's see here, Aurora Cannabis at the very top. So I bought one share at 71 cents. So obviously it wasn't a big acquisition at all. But as I mentioned in my last video, I wanted to get my shares between 500 to 550 for now. Again, I'm focusing on building a portfolio that's dividend stocks. The bulk of it is dividend stocks. So this won't be a priority for me moving forward. I will slowly, build over time and probably increase that position. But for now, that was just some change I had left over from making a couple other moves. So I was like, well, let me go ahead and invest in that. So I did want to stop here really quickly. Aurora Cannabis, and there's several other companies you can invest into, but the industry as a whole, there seems like there are two schools of thought. One, which takes my position of there are some challenges right now and over the long term that this industry could face and will face. But for me, long term, I do see that profitability and I do see that great opportunity. See, now the other side of the coin, of course, is going to be people just telling you, run.
Get you! Run, Forrest, run! Run, Forrest! We're back here.
Run. And I get both perspectives. It's one of those, you do your own due diligence and research, and you make the buying decision that you want to make, and time will tell. That was one of the small ones. Another one of the small ones were CannTrust. I purchased 2 shares of CannTrust at essentially 44 cents per share. So again, obviously not a large equity position at all. 69 shares, equity position of $31.05, as you see on the total return, and that's going to be pretty much everything right about now. Not every single thing, but a lot of things right about now. We're in a bear market. Everything's falling with the pandemic going on. It's definitely unfortunate. And with that, we have to pull together as a community, as people, not physically pull together. I'm just throwing that out there. Please listen to your local jurisdictions and in the White House, our president, and just the CDC and self-isolation if needed, or social distancing. I know that's a phrase that people are running into the ground, but right about now, I don't mind. Listen to it, and there's so many people that aren't. So anyway, but so I picked up 2 more shares in that. Over time, it won't be a priority, but I'll slowly over time just build up on that, on my position in I CannTrust. I will slide down to Nike, and I'll bounce over to the transaction so you guys can see that really quickly. Here we are, Nike on the 17th. I bought 2 shares at $69.61, totaling $139.22. Of course, Nike, I explained that in the last video, but Nike's a company with a solid performance history. Looking at it, I can't lie. I kept watching it. There's a couple of stocks I've been watching across the last couple of days. Nike was one of them, because I know that over time I do want to grow a reasonably sizable position with the company. So I kept watching. So eventually it actually fell under $69, but it came back up, then went past $69, then came back down. So I just went ahead and bought at $69.61. But again, I will continue to invest into Nike. It is one of the companies that I have full faith in from their track record, and even moving forward, of course, the long term. Right now, I do expect stocks in the market to continue to fall. I think the Dow's down 4,000 plus points now. I expect it to continue to fall. But in the long term, there's great international, and of course not with the pandemic going on, but again, long term, there's great opportunity on that international market for Nike to really dive in and expand their brand. So I'll continue to buy into Nike. Also moving down, so new residential investment. I was sitting there, I was watching that, and I was doing due diligence, and I always encourage that. Just a quick point for these stocks that you decide to purchase, or companies you decide to invest in. It's very important that you not only do your due diligence and research, your homework initially. Don't just do it initially and just stop, because you're not sure if things have changed, if companies going south. You want to know what's going on and what you're putting your money into. We work too hard to not at least do that. Take a couple of minutes, even if it's just a couple of minutes to do that. But I've known about this company for a couple of years. I've continued to look into the company, research and monitor its performance, how it operates, what it does in terms of its execution. So I have been very interested in this new residential investment. Doing my due diligence, of course, I glance over at Yahoo Finance. There is an article on that where a gentleman is citing essentially the same thing. Matter of fact, it's his number one buy in terms of bang for the buck right now. So, and then I looked at a couple other resources that were echoing the same. Now, you shouldn't look at other resources for confirmation. It should be more of a starting point, or just absorbing more data and more information and more perspectives. You shouldn't always look for like minds. Meaning you shouldn't always look for people that are echoing the same, because what could be equally as valuable is points to the contrary. It may jar you to get to think about something in a different way, or, oh, okay, I didn't think about that. I can understand that standpoint. Now, that shouldn't solely dictate the kind of decision you make in terms of buying or selling, for that matter, but it's just good information for you to absorb, think about, and then make your own decision, right? But this particular company, as I watched this throughout the day, I was thinking, this made me flash back to when I was selling cars. Man, goodness. But it made me think, these prices are falling and we're getting these good deals, essentially. Now, it's unfortunate what the factors are influencing these quote unquote good deals, or these shares, the prices to fall on the shares. But when you go, for example, like when you buy a car, you got to do all that arguing and negotiating and things of that nature.
It's crap. I will buy it for next to nothing.
How next to?
Well, here are your options. You can sell it for parts, drive it off a cliff, you can donate it to a person that you'd like to see die in a car crash, or you can sell it to me.
Which I typically don't do just because I know how to do it, but it's just a hassle of going in. But with these, there's no hassle. We're just watching them and they're falling. So I don't know, random thought, but anyway, I actually bought. So it was a couple of different times throughout the day. You see the 4 in the middle of the screen. A couple different times throughout the day that I made purchases. I was buying, and we'll pop into these pretty quickly. This one particular share, I bought one at $7.54. Then I turned around. It continued to drop throughout that day. So I bought 10 more shares at $5.96. You see the big difference between the first and the second group of shares. The third, it was $5.92, so I bought 17 shares. And then that last one, up toward the top there, 19 shares at $5.37. So now this money was actually allotted for new residential investment. So I don't want you guys, the focus is to maintain your budget. Stay within your plan. Work your plan. Continue to work your plan consistently. I was just waiting for opportunities to go ahead and invest that money, and that's what I did. So it took me to 64 shares, equity position of 459.52. I don't really worry about that right now because, again, it's a long-term game. So, but I will definitely continue to invest into new residential investment, and of course they do pay a dividend. So bouncing down, I did go ahead and this is the third cannabis company that I invest with or invest into. Apologize. Canopy Growth. I just went ahead and bought one share for now. Again, slowly, these are not my priorities at all. I built my position or my wanted position with the company that I really wanted to expand in. I'll slowly build all of these over time, but they're definitely not going to be they're not going to be priorities, should I say? Now, the last opportunity, and you, of course, you see at the bottom of the screen. This is a company that not only myself, but a lot of people have been watching for a good amount of time. I've been looking for an opportunity to invest into Tesla, and that opportunity finally came, at least for me. I don't foresee myself spending that much money moving forward a whole lot, not in one buy or for a single share. I definitely will, and I will continue to build that position in Tesla. But what I'm looking for is just what I deem to be reasonable value. It's one of those situations where I'm not trying to time the market. I'm not trying to play the guessing game, but when I look at it and I see and I feel that it's reasonable value, I'll go ahead and buy. But again, Tesla is not a dividend paying stock, but I did want to, again, like I talked about, I did want to take my shot. So that was my shot with Tesla. I'll bounce over and show you that transaction. So for Tesla, as you see, I bought it at $369.58, one share. And for me, I'm happy with that for now. Of course, I would like to grow that position, but it's up to 424.50 already. Again, that's very short term. I do expect that to continue to fall. For the near future, I expect the market to fall. Of course, there are going to be days it goes up, but I think ultimately we'll see that fall for across the board for most stocks. So, but I was happy with that Tesla buy for now. So I was excited. I can't even lie to y'all. I was excited because I think it is a very, very sound company. Of course, there are some obstacles that they're facing, like many other companies, but I think long-term, the financial positioning of the company, it's expanding. Of course, it's been halted actually right now because of the pandemic, but long-term, I see the growth there. They make a great product. We're seeing them more and more on the roadways, but I'm encountering more and more people just asking and inquiring about the products themselves. And they're definitely good. Of course, they made the claim they made the best chip. I don't know if I would necessarily agree with that, but they are a very competitive and very, very quality company in terms of their output. So, but when I saw that price drop, I had to curve in, man. I had to go ahead and get it. So, but yeah, so moving forward, again, I'm going to focus on just building those dividends out. I will take my shots as they present themselves, but my focus is, again, just to build that dividend portfolio. For me, with the pandemic and everything going on now, I am adjusting the amount that I'm going to invest. So instead of doing like $300 to $400 a month, which I was actually lowering to continue keeping that smaller amount to continue to focus on paying down debt. What I'm probably going to do now is invest $100 to $200 a month. But my sole focus is to keep on building on my 3 to 6 month emergency fund. I am not a licensed professional, just a humble guy giving you his opinion and how I see things. But I feel, in my personal opinion, if you do not have your 3 to 6 months worth of emergency fund built up, you should not be investing. I get it. It's a great time to buy, and the sooner you get your money in the market, start working for you, the more powerful it is, compound interest. I got it. But we have to get back to the fundamentals as a society and as people of being good stewards of our money. That means being on a budget. If you're not already getting on a budget, you can just Google that. There's tons and tons and tons and tons of different sources where you can get budgets, different templates, styles. Aesthetically, they look completely different, some of them. But me, I just made my own. Just hopped on an Excel spreadsheet, put in the formulas, boom. You can Google or YouTube how to do that as well. But it is essential that we not only get on a budget, but stay on a budget and honor that budget. Right now, we have to focus on protecting, and it's been like this always, but unfortunately, sometimes it takes something bad to happen for people to wake up, or to see certain things. Like Dave Ramsey says, when the tide goes out, you can tell who's been skinny dipping. And he says that jokingly, but truthfully at the same time. But it's the truth. You know, as we sit now, there's a lot of anxiety, a lot of fear, because there are a lot of people that live paycheck to paycheck. Some aren't necessarily able to make enough money, but a large majority of those people, oftentimes the money's not the problem. It's the person that gets ready with you when you're looking in the mirror, which is yourself. Living below your means, being a good steward, paying yourself before you pay anybody else, staying out of debt or getting out of debt, but really managing that money. So that should be numero uno, no más. You never want to invest money that you're going to need in the near future. Especially in the market that we're in now, where I expect the market to continue to fall, you're essentially at this very point going to be losing money. You know, and if that's money you need now, you're not going to have that ability to wait and think long term and let that money grow back up. So please, 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 protect yourselves, shore up yourselves, your families, and your household by being a good steward and getting that emergency fund in place and really working the plan to get out of debt. Now, with that said, I did say this is a great time to buy. We all know that it's a great time to buy. You will, you know, and it's sad. See a lot of craziness going on, man. You know, companies buying back stock, McDonald's, it's just ridiculous. And it's sad that you have people out there and companies out there, not all companies and not all people, not all executives, or investors, but there's so much about I, and looking for an opportunity to take advantage of people. There's a difference between looking for a sound and good opportunity and doing it the right way versus at the expense of other people. But in addition to that, there's a second concept that you may be familiar with, you may not, but I'll give you a quick snapshot of what it is. And that concept is the kitchen sink effect. The kitchen sink effect. So what that does is a company will get all the bad lowdown, all the bad news about their own company and put it out there. This is a very calculated and strategic move. So what they do, again, they're going to collect all the bad information or negative information or news about their company or their own company and put it out there. That's going to do a couple of things. First, what that does is causes a sort of a panic around that particular company or stock. So it drives a lot of the average investor away. Typically, if we see a whole lot of bad news surrounding something, we're not going to go and invest money into it, right? The typical investor. Also, what that's going to do is instead of the company or the shares bleeding out over time, meaning the bad news coming out once discovered across time by somebody else, it causes that long, over time, it just slowly decreases. They'd rather get that drop right now and force that drop right now to try and get market bottom or get that share or the price of the share as low as they possibly can to double and triple down. You'll see people start buying big chunks of companies or shares of companies. At that point, the investors, the insiders, the executives. And I think that's sad too, because again, they've driven away a lot of the would-be investors with all the bad news spoof. So typically the average investor is going to stay away. And on top of that, they've maximized their ability to gain that profit because when the market swings up, they're in a beautiful position. So, and this is stuff that's been going on since the dawn of man. And unfortunately, it won't stop. But these are little tricks of the trade and tools that you can sort of look for. Now, you shouldn't look at the stock market solely through that perspective, but these are little things that you can be aware of. So when you see that a mass amount of negative news, do your own research and look sort of through what's presented to you. Just saying. Some you should stay away from. Some, others, not so much. So be your own judge. Make your own decision. This hasn't showed us anything else among all the lessons is that you have to be a good steward because eventually it's going to rain. Something's going to happen. You can lose your job, an emergency come up, health, etc. Just having that cushion definitely helps. It may not solve every problem, but it definitely helps. And sometimes it gives you that little bit of peace of mind as you go into what will already be a rough situation. So, guys, let me get off my soapbox. I definitely appreciate you again for checking out my channel. Again, if you're new here, and even if you're not, if you're family already, please, please, please go ahead and like my video, subscribe to the channel if you haven't already, and go ahead and comment down below. What kind of investor are you? You know, if you're a dividend investor, you go more towards dividend stocks, or you don't, or a balance. Thanks for checking me out. Thanks for rocking with me, good people. Until next time, I'm out.